Let's take a closer look into the FICO scoring model and the impact and what does that mean for you. So first, FICO was created by a company called Fair Isaac Corporation, and it still complies with the 3-digit scoring model from 300 to 850. Now, 90% of lenders use the FICO scoring model. Remember, we said there's multiple other models that exist, but we want to focus on FICO because that's the most commonly used. The different grades of the scoring model makes a big difference. So for starting off from the bottom, the 300 to 579 credit score is labeled as very poor. Now, what does that mean for you? So let's just say, for an example, you're trying to rent an apartment and you go through the application, they run your credits. So if they see that you have a poor credit score, that means that either one, you could be denied, or you may be having to put a 1 or 2 or 3 months security deposit to ensure that you're not going to default on that application. I've even seen as far as a 6-month security deposit for people in this category. Next is your fair credit grade, which is from 580 to 669. Now, people in this category may experience a type of loan what we call subprime, which means that you're going to get higher than normal interest rates because of the scoring model. So the difference between of you purchasing a car, and if you have a poor credit grade, you can get a car for maybe around 20% interest, 15 to 20% interest rate is the norm, versus an excellent credit score, which you can get a 1 to a 2 or 3% interest rate. Now, for the same piece of vehicle, you're actually paying 4 times more versus having good credit. Next is your good credit score, which is a 670 to a 739. People in this category will receive the minimum benchmark for receiving credit. So if you're applying for a credit card, typically a minimum around a 660 is what they'll leave off at. We have seen some lenders out in the 620 to a 660 range, but of course the minimum benchmark to get those American Expresses, their Chases of the world, is around 680 to a 700. Of course, the higher the credit score, the lower the interest and the higher qualifications you'll receive. Now, it's said that only about 8% of people in this category are most likely to be delinquent in the future. Next category is your very good credit, which is a 740 to a 799 scoring range. Now, people in this category are most likely to receive those good interest rates, very much above average than the majority of lenders that will offer these services in this credit. And of course, last but not least, if you hit that perfect credit formula with the 800 credit score or above, this is where you are considered a credit god and you can apply for anything you want and get the best interest rates with the most amount of money, because you have a very, very low chance of defaulting through this category there. Now, it's really good to understand the different scoring models, because how this reflects with you and how you maintain your scores is actually very motivating to once you start seeing your scores increase by adapting these rules that we'll be teaching you.